Another anchor investor selling shares in Nykaa. Today it was Lighthouse, which sold 18 million shares in FSN e-commerce in a block deal. The investor held 2.04% stake or 56.5 million shares in the company as on 12th of November. It had already disposed of 30 million shares last week, leaving it with just about 8 million shares. Lighthouse is just the latest to sell its shares. Investors like TPG Capital and Sengati have also offloaded shares in the company after the lock-in period for anchor investors ended last week. Sakshi Batra spoke to Shyam Shekhar of iThought Advisories about the sell-off and about the timing of the bonus issue coinciding with the end of the lock-in period.
Are these pre-IPO investors really selling, when they're selling after this pre-IPO lock-in, are they really taking a hit on the investments? Because the stock price has already crashed about 50-60%. Or had they entered at a much lower price and they're still sitting on profits, and no matter at what price do they really sell, they're still going to make profits?
If I'm going to second guess their mindset, I'm reminded of a very famous Zurich axiom from the book by Max Gunther. When your ship sinks, don't pray, jump. That seems to be the mindset of all these investors. They're not looking at the valuation. They're looking at how each of them can get out before the others come to sell. It's as simple as that.
Right. Also, Mr. Shekhar, you've written extensively about the problems that you actually saw with Nykaa's bonus issue that we saw earlier this month. Now, there is an argument that the management was just intelligently avoiding a fire sale, as they intentionally coincided the date of the bonus issue with the date of the lock-in period ending. Do you really believe so in that argument?
I leave it to the wisdom of regulators, public watchers, media, and market participants. To me, it would be too much of a coincidence. I mean, to believe that these promoters didn't even read what they were doing is rich. It's very, very creative and rich.
Okay. And you also said that getting a bonus share has perhaps been, in a way, negative for the existing investors. So could you explain that, especially when you talk about the tax outgo that you expect from the existing investors that they have to be prepared for now?
My primary concern is the investor who bought these shares in the listing. Let us talk for him, about him. Let us assume that you bought these shares at those elevated valuations on listing. Now, if you see the fortunes of the company are not what they looked at or looked like during the listing, you want to get out. So you want to sell now. If you want to sell now, you're going to make losses all the way on the original shares, or you may make a small profit depending on what price you bought it. But
Right.
on the entire bonus share, you're going to make a technical loss, but you have to pay taxes if you sell. Imagine making a real loss and paying short-term capital gain. I think that this is like putting the investors who participated in listing and believed the perception that this company was giving to them blindly, bet on the promoter's entrepreneurial skills and her ability to deliver to them. These investors are being put in a gas chamber. I have not seen something like this in many, many, many years of my presence in the stock market, especially in an IPO. Our IPO system had refined itself tremendously over the years. It's very sad to see what we're seeing today. See, because you have reduced the public float to ensure that retail investors come in later and not in the IPO. So you have actually given a lot of shares to anchor investors and early stage investors, pre-IPO investors, reduce the public float, manage the public float in such a way that those who want to buy on listing will have to buy from the QIBs 1 month later. And all these people have bet on the company and bought these shares at a significant premium to the IPO price.
True.
And today, if they have lost their faith in the company, they'll have to sell these shares. They don't have much of a choice because the guys who have bought the shares much cheaper than them are rushing to the exit gate. So that fear is going to rub off on retail also eventually, unless the company does something miraculous to restore confidence.
Sure.
So if the confidence is going down and the retail investor is going to come and sell, he's going to pay taxes on those bonus shares, on which he made a loss, which is, in my opinion, not fair.
Absolutely. So in that case, what exactly is a market regulator's attitude, SEBI's attitude to such cases? And also, are these really considered as what you earlier pointed out, a corporate governance issue as well?
I think this is clearly a corporate governance issue, and I am sure that the right response will come from regulators. It is still early days. I am sure that the right response will come. So I would not jump the gun on that. But I definitely hold the board and the independent directors accountable for this mess.
Right.
I mean, if I'm sitting on a board, I would obviously know the consequences of a decision which I'm making. Otherwise, I shouldn't go on a board of the company.
Right. So do you
And if I
believe
cannot-
that somebody from the board at least should have raised an alarm on this bonus issue?
Well, anybody with basic knowledge of directorial duties would not have allowed this. Or anybody who respects that role adequately would not have allowed this. That is how I would say it.
But have you ever noticed any such instance with other recently listed companies, or is it an issue particularly with Nykaa?
I think that companies are misusing bonus and stock splits to manipulate public float. This is a serious warning bell. This is not the first instance. There have been other instances also. And companies are misusing bonus and stock splits to dissuade investors from selling. And that effectively is creating over-reliance on management of public float. And people are relying more and more on this way of managing valuation by managing public float. And this in turn makes perception and the management of perception a lesser priority in the eyes of managements and boards. I think that is the serious signal or the serious warning that I am getting from these kind of actions.
If you like the video, do like, comment, share and subscribe.